Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start a new subject, Financial Decision Making 2. Already I have uploaded Financial Decision Making 1. So in the next semester you have this subject called Financial Decision Making 2. So on the request of so many students, I'm going to start this new subject. So in this subject, totally 5 units we have. The first unit is decision analysis. In this decision analysis, what are the techniques available to the management for taking managerial decisions? So best example of the technique is CVP analysis. So by using CVP analysis, management will take a number of decisions. So that's what I'm going to explain you. I'm going to solve the problems on CVP analysis in this unit, unit number 1. Then unit number 2, we have pricing decisions. Pricing is also one of the important function of the management. So what are the different methodologies to be applied while pricing the product? That I'm going to discuss in second unit. Third one unit is risk management. This unit is very, very important. Risk management. Risk is always there in every business. A business organization has to recognize the risk, calculate or measure the risk, then control the risk. So risk identification, risk measurement, risk controlling techniques, all these things, and particularly what are the different types of risks which every business is exposed. That I'm going to explain in unit number 3. Unit number 4, we have investment decisions. Before investing the funds, a business has to evaluate what are the implications from these decisions of investment. So best example is capital budgeting decisions. So what is capital budgeting decision? What is the capital budgeting decision process? What are the different techniques available to take a capital budgeting decision, like net present value, payback period, internal rate of return, profitability index, all the techniques, and we have the problems in this unit, investment decisions. Lastly, unit number 5 is completely theoretical, that is professional ethics. In this, we have to discuss about the business ethics. What are the ethics to be followed or considered by the management while taking business decisions? So these are the 5 units which I'm going to cover up in this subject of Financial Decision Making 2. So first of all, I'm starting with unit number 1. In unit number 1, the topic is decision analysis. The first and foremost function of the management is decision making. What do you mean by decision making? Choosing among the alternatives. So many alternatives are there, out of which the management has to select any one of the alternatives. That is called decision making. So how to take the decision making? The decision making can be done by collecting the information, by analyzing the information, by applying different techniques. So in this unit, I'm going to explain you what are the techniques available to the management for decision making. So important topics in this unit number 1 are, first of all, cost, volume, profit analysis. Simply it is called CVP analysis. Then break-even analysis, which is a technique of CVP analysis. Thirdly, profit performance and alternative operating levels. The management has to evaluate the profit performance at different levels of activities. Then analysis of multiple products. Nowadays, most of the business organizations are not engaged in only one product. They are dealing in multiple products. So in a business, in a company where multiple products are produced, the management has to decide about the product mix. That is also covered in this unit. Next, marginal analysis. Marginal means differential. By changing the activity, the cost and revenue will also change. What are the changes in cost and revenue? That is marginal analysis. Then sunk cost, opportunity cost, and other related cost. See here, in order to control the cost, the management must know what are the different types of cost, what is the behavior of cost, how we can be able to control the cost. So without understanding the concept, the management cannot be able to control the cost. So I will give you the explanation about what is sunk cost, what is opportunity cost, and different types of costs. Then we have marginal cost and marginal revenue. The marginal cost means the additional cost incurred to produce one unit. Similarly, the additional revenue by selling one more unit, that also covered. Special orders and pricing, then make versus buy decisions, sell or process further decisions, add or drop a segment, capacity consideration. These are all the techniques of CVP analysis which are used by management for different decisions, like make or buy decision. The management has to take a decision regarding the making of the product or buying it from outside. Many a times the business is confronted with the situation where the business has to take the decision whether to make it or buy it from outside. Similarly, sell or process further. Should we sell the product during intermediate stage, or should we further process and sell it? Similarly, add or drop a segment. A part or a product should be added or dropped. All these are the managerial application of CVP analysis. CVP analysis will be very much helpful to the management for taking this type of decisions. So these are the topics to be covered in unit number 1, decision analysis. Remember, not only problems but also theory is very, very important. So while I am delivering the lecture, always you should keep a notebook, a pen, calculator, all the accessories ready. Whenever I explain you something important, make a note of it. Then only you can be able to get a complete command, confidence on the subject. Now, first of all, very important topic, very frequently asked in examination, what is CVP analysis and break-even analysis? Cost, volume, profit analysis, commonly known as CVP analysis. CVP analysis is a profit planning technique of the management. Every management will plan about the profit. The profit planning technique is CVP analysis. It provides information to the management in the following matters. So by seeing how this CVP analysis will be helpful, in what matters it will be helpful. First, the behavior of cost in relation to volume. Volume means output. All the costs are not same. The behavior of cost change with the change in the level of activity. When the output increases, some cost will remain same, some cost will partly change, some cost will fully change. So behavior of cost we can be able to understand by applying CVP analysis. And behavior of cost is necessary to take the decision regarding controlling the cost. Secondly, volume of production or sales where the business will break even. Every business wants to find out at what level of activity my business will break even. Break even means the point at which there is no profit, no loss. Neither profit nor loss. That level of activity is called break even. For example, I am selling some product. For example, some air coolers. So I want to find out by selling how many air coolers I will be at a position of no profit, no loss. Example, if I sell monthly 50 air coolers, then my business will be at no profit, no loss. If I sell less than 50 air coolers, I will incur loss. If I sell more than 50 air coolers, I'll get the profit. At exactly 50 air coolers, no profit, no loss. That is called break even. So this CVP analysis will be helpful in finding out the break even. Third one, sensitivity of profit due to variation in output. See here, when the output changes, the profit will also change. Profit is very sensitive to output, but the rate is not proportional. That means the percentage change in output will not be equal to the percentage change in profit. It may be more, it may be less. The management wants to find out what is the sensitivity of profit due to a change in the level of activity. That again can be known by using CVP analysis. Fourth one, amount of profit for a projected sales volume. the management wants to attain a sale of a particular level. So how much profit we can get by attaining that level of sales? Example, next year the management wants that we want 50 lakh rupees of sales. That is a target sales. If the business achieve the target sales of 50 lakh, how much would be the profit? Again, CVP analysis will give the answer. Last one, quantity of production and sales for a target profit level. Suppose the business has set up the target profit. Next year we want to earn a profit of 10 lakh rupees. In order to attain that 10 lakh rupees, how much production, how much sales we have to conduct, we have to make. So these are the matters on which the CVP analysis will solve the problem. Now, the CVP analysis may therefore be defined as the managerial tool showing the relationship between various ingredients of profit planning. Example, cost, selling price, and volume of activity. Now, this is very important. This shows the meaning and definition of CVP analysis. So what is CVP analysis? It's a managerial tool of profit planning which shows the relationship between the ingredients of profit planning. What are the ingredients of profit planning? The cost, the selling price, and the volume. There is a relationship between these three ingredients, that is cost, volume, and profit. So the CVP analysis is a profit planning technique which shows the relationship between the ingredients of cost, volume, and profit. Now, such an analysis is useful to finance manager in the following matters. How this CVP analysis will be helpful to the finance manager? First of all, it helps in forecasting the profit. Planning is the first function of management. The management will plan about the profit. How much profit we may get in future, in the next 6 months, in the next 1 year, in the next 2 years. We want to make the planning of the profit. Then the finance manager will make use CVP analysis. Next one is helps in setting a flexible budget. A budget is a tool and technique of planning. By preparing the budget, a business will plan. So for making the flexible budget, again CVP analysis is a handy tool to the management. Next one is it assists the business in the evaluation of performance. Evaluation of the performance. See, once planning is made, automatically we cannot achieve whatever we have planned. We have to evaluate, we have to control the activities. So if we apply CVP analysis, we can be able to evaluate the performance. Are we going according to our plan or not? Next one is it helps in formulating pricing policy. Nowadays, the very important decision-making area for the management is pricing policy. Pricing policy. Nowadays, a lot of competition in the market is there. If we arbitrarily fix the selling price, we cannot be able to achieve our objectives. So in order to compete with the competitors, we have to fix a reasonable price so that the demand should be more and also our profit should also be more. So how to make the pricing policy? CVP analysis will help the finance manager. So these are the areas where finance manager will take the help of CVP analysis. Thus, CVP analysis is an important tool through which management can have an insight into the effects on profit on account of variation in cost and sales and take appropriate decision. Finally, we can say that CVP analysis is a very, very important tool in the hands of the management for taking a decision regarding the profit, regarding the cost, regarding the sales, regarding the volume of output. And the management can be able to take appropriate decisions on the basis of CVP analysis. This is the complete theory on CVP analysis. The next topic is break-even analysis. The break-even analysis is a widely used technique to study cost, volume, profit analysis. Actually, cost volume profit, CVP analysis is a very wide concept. In that CVP analysis, one of the technique is break-even analysis. So we can simply say break-even analysis is one of the technique of CVP analysis. The narrower interpretation of break-even analysis refers to the system of determination of that level of activity where the total cost equal to total selling price. Now see here, there are two interpretation or meaning of break-even analysis. The first interpretation is the narrower interpretation, where break-even analysis simply means finding out that level of activity where the total cost will be equal to total revenue or no profit, no loss. Simply finding out break-even point is break-even analysis, but that is a narrower concept. What the broader concept says, the broader interpretation refers to that system of analysis which determine probable profit at any level of activity. So break-even analysis is concerned with finding out the probable profit at different levels of activity. Example, if the business produces 10,000 units, how much would be the profit? If the business sells 20,000, if the business sells 30,000 units, at different levels of activity, how much the business will get the profit. That is the broader interpretation of the term break-even analysis. Now, it portrays the relationship between cost of production, volume of production, and the sales value. So it shows the relationship between cost, sales, and volume. The difference between the two terms CVP analysis and break-even analysis is very narrow. Many people will argue and think that CVP analysis and break-even analysis are one and the same. Both are synonymous. We can interchangeably use break-even analysis or CVP analysis. But the difference is very narrow. What is the difference? Here, CVP analysis includes the entire gamut of profit planning, while the break-even analysis is one of the techniques used in this process. The complete gamut of profit planning is the domain of CVP analysis. Whereas this break-even analysis is only one of the process, one of the technique of CVP analysis. That's it. So I have explained you about the meaning of the term CVP analysis and the meaning of the term break-even analysis. Now, advantage of CVP analysis. Many advantages are there of CVP analysis to the management. Because it's a technique of profit planning, the management can be able to take a number of decisions, managerial decisions on the basis of CVP analysis. That means it will help the management in profit planning, it will help the management in making the budgets, it will help the management in evaluating the performance, it will help the management in making the pricing policies, etc., etc., etc. So many advantages are there. So CVP analysis is a useful planning and control device. This will help in making the plans and also in controlling the activities, showing how revenue, cost and profit fluctuate with the volume. That means it will show the relationship between cost, profit and volume. How there is a change. If there is a change in the activity or output, what is the effect on cost? What is the effect on profit? If there is a change in price, in cost, what is the change? All these can be known by using CVP analysis. The CVP technique is useful to management in the areas of budgeting and cost control and decision making. So many areas are there where management will make use CVP analysis. That is the advantage. Now, limitations of CVP analysis. Don't think that CVP analysis will have only advantages. The CVP analysis will also suffer from some limitations, some drawbacks. The drawbacks of the CVP analysis is it is based on some assumptions. The assumptions are that cost will remain same, selling price will remain same, but in reality the cost, selling price will fluctuate from time to time. So if you want the best results from CVP analysis, what you have to do, you have to modify the CVP analysis technique time to time whenever there is a change in selling price, whenever there is a change in the cost price. So as changes are taking place, the CVP analysis should also be changed, modified accordingly. Otherwise, if we keep constant CVP analysis techniques and there are changes in the cost, in revenue, what will happen? We will not get the true results. So simply we can say the CVP analysis will give not exact answers but approximate answers to different problems. In spite of CVP being a useful technique, it suffers from some limitation. Firstly, because many assumptions, CVP analysis is only an approximation at best. So most of the time, the CVP analysis will not give the best decision. It will give an approximate decision. It will give better decision, right? Next, if prices, unit cost, sales mix, operating efficiency or other relevant factors change, the overall CVP analysis and relationship also must be modified. Whenever there is a change in the cost, there is a change in the price, there is a change in the activity, there is change in the operating efficiency or any other factor, if there is a change, correspondingly the CVP should also be modified. If it is not modified, we will not get the good results. Therefore, while preparing and interpreting CVP analysis, all the assumptions and limitations should be carefully considered. So blindly, we should not apply and accept the CVP analysis. While applying the CVP analysis, we should consider, we should keep in mind what are the assumptions, what are the limitations of CVP analysis. Considering that, we should apply the CVP analysis. So CVP analysis should be revised to reflect the changing situations. The situation is completely dynamic. Always there are changes in the situations. So this should be kept in mind, that CVP analysis should also be changed according to the changing situation. Otherwise, we will not get the best results from CVP analysis. That's all. So in this video, I have explained you about the first unit decision analysis, which consists of CVP analysis and break-even analysis. What are the advantages and limitations? Remember, don't go only for problems. Theory is also very, very important. If you watch the theory if you watch the video 2-3 times, definitely all the points will get in your mind. So easily, with confidence, you can write in examination. All the best for your preparations. So if you are satisfied with my lecture, give a like to the video. Share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. Give your comments, subscribe if you have not yet subscribed, and buy the super thanks option which is given below my video. Inshallah, we'll continue the discussion on this decision analysis in the next video.